feel like this story is right up your alley. I mean, you've been following the Mideast tension so well. Now that we've heard from the U.S. and we've heard from Iran, they're both blaming each other. Things are looking increasingly tense. Why are we only seeing 1/3% pop in oil prices?
I mean, I think the market is still really concerned about demand. You had the IEA out this morning warning about demand contraction, being oversupplied in 2020, and we've had no physical disruption of oil to date. So I think the market is taking a sort of wait-and-see approach. I think until we can get beyond demand concerns, geopolitics is going to have a hard time pushing prices much higher unless we get a major disruption.
Where does this war of words between the U.S. and Iran go?
I mean, I think this is very serious. I don't think oil prices reflect the degree of severity in the Middle East right now. I mean, the key question is, what is the U.S. response going to be? We've come out and blamed Iran now for attacks on 6 tankers in the past month. Are we going to intensify sanctions? Are we going to deploy more military assets to the region? I think the U.S. response will be very important. And also, what do the Iranians do next on their nuclear program? So I think those are the factors to watch in terms of where the crisis is heading.
There have been some reports of assets moving around, but have you seen anything that suggests we're deploying assets to the region in a significant way?
Well, I mean, we've basically 1,500 more troops are being deployed to the region. There are some reports that Pentagon officials have asked for up to 20,000 more to be deployed. President Trump has been reluctant to do a major military increase in the Middle East. He keeps saying he does not want a war. But if you have more tanker incidents like this, if you have more attacks on Saudi infrastructure, like we saw with the attack on the airport, 2 days ago, those type of things could force his hand.
Roger, how are you balancing the rising tensions in the Gulf with the rising supply, including the EIA's report today, which shows that U.S. shale continues to pump a ton of oil?
Well, the increase in shale is important because it has really changed the psychology of the market. We have really moved from this narrative of supply scarcity to supply abundance, and I think it's really changed how we need to think about oil markets. And this is a good example here. This incident doesn't really rile up markets enough because the sense is supply is always on the way and it's rising.
So what does that mean ultimately for prices, that they're not going to rise?
Well, it means that these incidents are not enough to shake up this complacency that we're seeing in prices, and what Helima said is important. Right now, the narrative is about demand destruction and slower demand emerging. Everybody's reducing their demand forecast. The demand data in April and March were very bad. So I think we're still into that demand destruction narrative and slowing growth. We would need these incidents to really stop the flow of oil or significantly slow it down to have a significant impact on prices.
Yeah, I mean, how much of the forecast today from the International Energy Agency had to do with the lower demand and the global economic worries out there, the trade war, and how much with the rising supply?
I mean, I think if you look at where we were at the beginning of May, we really look like a situation where Brent was potentially going to 80. I think the resumption of the trade war stopped oil's rise in its tracks. And so I do think if we get, better optics out of the G20, I'm not saying we will, but that could be something to watch for that could make geopolitics become more salient to the upside. Right now, it's a geopolitical story of trade wars, I think, really weighing prices down.
Roger, DataTrek's got a nice report out today, and in it they remind people that since 1970, you haven't had a recession in this country without oil prices doubling first. Can you think of any scenario that would get us to 100?
Well, you would really need a big disruption in the Persian Gulf. That's the only way we would get there. We already had quite a lot of oil out of the market with the Iran sanction and what's happening in Venezuela, and that has not impacted the market. Again, the demand narrative is more important, and the growth in shale remains here. So you really need a big disruptions to push prices up.
Would that do it?
I mean, I think in terms of what you would see, if you start to see tankers actually being sunk, if the U.S. has to deploy the Fifth Fleet more aggressively to keep sea lanes open, if you had an attack on a major facility like the Abqaiq facility in Saudi Arabia, the world's largest oil processing facility, Al-Qaeda did an attempt on it in 2007. Those are the type of things that you'd really look for a real breakout in terms of price.
I mean, are they able to close the strait at all?
No, they probably cannot close the strait.
Iran, I mean.
Iran. But what they can do is they can basically do one-off attacks on tankers. They can mine the straits. they can sink tankers. And already shipping companies are sounding the alarm about the security of these critical choke points. So you can see this situation intensify and be meaningfully affecting prices. But again, I think right now there's complacency. If this trend continues in terms of tanker attacks and some start getting sunk, I think oil prices will move higher.
Roger, what does OPEC do about all of this? I mean, the new forecast today from the IEA and the rising tensions between the U.S. and Iran.
Well, they're in a difficult situation because on one hand they have to look at the weaker demand and on the other hand the disruptions. And I think that OPEC meeting, which is still on an undeclared date, if you want, before the G20 or after the G20 is really important. And they're going to have to weigh these two things. And it makes the market management quite difficult, and also the relationship between the different countries and how to manage the geopolitical waters here quite difficult. So I think OPEC is in a wait-and-see attitude, most likely do nothing and wait to have more information before acting.
I mean, I think OPEC's going to roll over the production cut. I think at a minimum they will roll over the 1.2 million production cut they announced in December. The question is, given that many of these countries need higher prices, do they potentially signal willingness to do more?
So you think ultimately, I mean, is the bottom line on this that the trade war matters more than these tensions with Iran?
I think right now a trade war matters more than a potential shooting war. But if you get a real shooting war, the dynamic could change.
What's your target, Roger? Near term and by end of year?
Well, I think we're going to stay into this $60 to $70 for Brent unless we have a shooting war. Then it will go higher than that. But otherwise, OPEC can hold the floor, and I think demand in the second half will look better, at least in terms of the numbers, than the first half.
What's your target?
I mean, we see, basically a binary. I mean, if we're in a situation where trade war fears continue to escalate, I mean, Brent's going to really struggle to get out of the sort of low to mid 60s. But, if geopolitics takes over, I mean, you're back into the 70s.